Hi there, welcome to kneppyinvests and welcome to July the 23rd, 2024. We have just under 40 minutes left of trading today. It is 3:31 p.m. And I was going to say, pretty good day on the markets. Everything looks like it's in the green, apart from mining. Mining's down. Resources sector down 0.64%. Now, I do enjoy this time of year. We are almost into the final week of July. So we are starting to see more and more Appendix 4Cs, 5Bs, and mining companies' quarterly reports being released. I just don't like the final day of July or the quarter because that's when most of the companies decide to release their quarterly report at the last second. Well, it seems like that anyway. And there is maybe a little bit of evidence that if a company does have a good quarter, they tend to release it a little bit earlier than other companies. So it's not perfect, but there is a bit of a correlation there between the time a company releases their quarterly report and how good it is or how bad it is. Anyway, so what's the agenda for today's video? We'll go through the best and worst performing sectors, indices, and companies. Might have a look at a few tweets as well before we do the check of the best and worst of today. And then we'll have a look at the top 5 stocks of the day. I am umming and ahhing about number 5. I might change it, don't know. We'll also have a look at the announcements that have been released since about 10 a.m. I'd say there's quite a few that have been released that I have not had a look at, and some of these announcements might change my opinion on what belongs in the top 5 stocks of the day. I will talk briefly about some of the other Appendix 4Cs, 5Bs that do not make it into the top 5 stocks, and then I'm going to have a look at some charts, including an update of Crowdstrike, down a fair bit, and you'll be able to see that. Why I want to look at Crowdstrike when we look at a tweet. And also have a look at quite a few other companies that I'm following right now. Okay, so let's have a look at these few tweets. First one is from the Kobe SC letter, talking about how expensive US stocks are. In fact, US stock prices are now 3 times higher than global equity prices, the most on record. This ratio has doubled in 8 years, is almost 3 times above the long-term average of 1.1 times. By comparison, during the Nifty 50s and dot-com bubble peaks, this ratio was just 1.7 and 1.3. So it's 8 times now. And no, the thing I think you have to understand about the American markets right now is the best companies, the best quality companies in the world are listed on the NASDAQ or the New York Stock Exchange. You can't really say, or couldn't really say that 10, or maybe 10 years ago could have. You couldn't really say that 20, 30, 40, 50, 60, 70 years ago. It is a little bit different right now. So I wouldn't get caught up in this sort of, or these sort of tweets saying how expensive the US stock market is, because if you have a look at the individual companies on the US stock market, the NASDAQ, they're not that expensive because they are big companies that are growing at really good rates. So I don't get spooked by these sort of these sort of tweets or even emails, but I like to have a look at all types of tweets, emails, whether they're bearish or bullish, because I think you do need you can't pigeonhole yourself. If that's the right word or way I'm using that word. You can't. Put it this way, when people tend to have biases, they seek out the evidence to support their biases. So I might have biases, but I don't go out of my way to seeking to those tweets or emails that justify my biases. I want different opinions. I want different points of view to challenge my biases. And this is one of the things that really pisses me off, if I can use that word, about people these days. They have their biases, whether it could be on something really stupid like the world is flat, and they don't seek other opinions, other points of view. They just stick to their biases. They believe the world is flat, and that's it. I don't know why I'm using the world is flat, because there's way more other issues out there. Anyway, so, I mean, it's true, but there's reasons behind it why the US stock market is expensive by this metric. Okay, the other tweet, and you might have seen it if I go back. Here he is back. And this is in regards to Crowdstrike. Cathie Wood bought the dip in Crowdstrike on Friday, but unfortunately the dip kept dipping. In fact, I was thinking of buying some shares in Crowdstrike overnight. I didn't. I just wanted to see. ARK Invest lost 1.6 million on the Crowdstrike position today. I'm going to challenge this. I'm going to push back on this comment. ARK Invest didn't lose any money. It's a paper loss, but they did not, unless they sold their position, they did not lose any money. The value of their position fell, but they did not lose money. This thing actually does peeve me off a little bit. It's one of my pet hates when people say someone lost or gained a lot of money on a paper position. It's a paper loss. It's not a real loss. The value of the position fell, but they did not lose any money. But I am thinking about buying some shares in Crowdstrike. I haven't come to a decision just yet, and I'm going to have a look at the chart at the end of the video. Okay, so that's all the tweets I really want to talk about today. So let's have a look at the ASX today. A fairly negative day if you're in mining. So let's have a look at the sectors. Energy, in fact, down 1.76%. So Woodside down, Santos down. What are the energy companies in the ASX 20? Probably Origin Energy, maybe AGL's down. Materials down 0.17%. So that resources down 0.62% is because of energy. Staples flat. It's defensive. You're not going to see much rise or drop in staples, to be honest with you. Real estate almost flat, but a really good day for IT, which makes sense because the NASDAQ was up. How much was the NASDAQ up? 1.54%. So that makes sense. The IT is up 1.47%. Healthcare's up a fair bit, so go CSL. Industrial's up by 1.26%. Discretionary up by 1.1%. So pretty good day in the market, particularly if you're invested in those sort of sectors. On the indices side, I'm just looking at gold. Gold's down 0.81%. So overall, a lot of mining companies are probably down today, particularly if they're in energy. And I'm just going to have a look at the ASX 20, down or up 0.4%. So there is quite a few resource companies in the ASX 20, so that's why it's up by a smaller amount than the XJO. So if we do open up the ASX 20, I'm assuming maybe 5 or 6 companies are down and the rest up. So we'll say 5 down, 15 up. No, we'll say 6 down, 14 up. Yay! Well, makes sense. 14th of June. There we go. And straight away, Woodside, Santos down. Maybe BHP, Rio Tinto, Fortescue, maybe Goodman Group. Those companies up. WiseTech, REA Group, Aristocrat. Oh, there it is. Okay, so let's have a look at those companies down. Yeah, Woodside down a fair bit today, which makes a mockery of those traders who said it was a technical buy. And I was hearing that last week, and I was like, why is it a technical buy? I just don't understand. I might have a look at the Woodside chart again. I just didn't understand why. Someone on AusBusinessCall said it was their largest position, trading position. I was like, anyway, Fortescue, Woolworths, which is a Staples, down. Goodman Group, Rio Tinto, and Macquarie Group. And the best performing company, WiseTech. There it is. WiseTech, NAB, for some reasons, had a good day. Wesfarmers, Transurban, Westpac, CSL, CBA, and CSL is up to $312. Gonna have to have a look at CSL. Share price keeps on increasing, and CBA keeps on climbing. P ratio, that company is getting like to 100. I'm being overly dramatic saying that, but Collins Bank could be one of the most expensive companies in the world right now. I'm not joking when I say that. I sort of am, but it is one. I just don't understand why anyone would be buying CBA right now. And that's honest. I'm being honest. Anyway, let's have a look at the top gainers. And straight away, we see the company that will come in at number 1 on my top stocks of the day, Delorean. So every single time I see this company, I just think of Back to the Future, which sort of makes sense. Why wouldn't you think of Back to the Future when you see Delorean? Anyway, elsewhere on here, Quickstep, there it is, up 22.41%. That's coming in number 2 on my top 5 stocks of the day. And just behind Quickstep, we have Spartan Resources. Did not make it in my top 5 stocks, but I did want to have a look at the chart for that company. A non-producing mining company whose chart looks absolutely brilliant. So I do want to look at the chart for that company. Market cap of Spartan is 1.33 billion. So a lot of promise is already baked into the valuation of that company. And as we go down the list, I'm happy to see Swoop up because I'm a holder of that company. They released something interesting yesterday. Mesoblast apparently released something after midday, I think. I did see it on the list. Yeah, 2:18 p.m. Not that long ago. Did release FDA accepts Mesoblast BLA resubmission for whatever it's called, and the share price is up 12.2%. Let's just have a look at the chart for Mesoblast. All over the place. Yeah, all over the place. But share price is getting to almost a breakout level. So good times for Mesoblast and shareholders of that company. But this sort of announcement, to me, it's not trigger happy. I would not be triggered by this particular announcement. Some other interesting announcements that have been released since midday, but I'll talk about this later. Otherwise, nothing else there. Let's have a look by market cap. Oh, Zit's having a good day. Insignia, a good announcement yesterday. Not as much reaction as I thought there could have been. A good reaction today. Possible breakout. I thought it was a possible breakout yesterday. This could be confirmation of a breakout for Insignia. This is exactly what I'm looking for. So potential buy for that company. Might have a look at the chart for Insignia as well. We have Mesoblast, Spartan, good day for Nuix, good day for Superloop. Both those companies have bounced. I had a look at Superloop's chart yesterday. I was like, oh, share price has dipped a bit. I think there could be a bounce. Southern Cross Electrical, a good day there, up 9.7%. Calix. I have a feeling Calix released something as well. Yeah, Calix. Have a look at Calix later in the video as well. Announces 15 million grant for zero emissions plant. So the share price has had a little bit of a bounce today, and it might have bounced off $1. It's getting very, very close to $1. Yeah, chart looks horrendous though. So not really that keen on Calix right now. And it's probably all. That's what I'm going to talk about right now. Anson Resources. Did they release something today? For some reason, that company is. I maybe thinking of another company. Now they released something yesterday. Okay, so let's have a look at the worst performing companies today. On this sort of day, you don't want the biggest holding in your company to be on this list. So let's have a look at some of the companies in this list. Now, Axel REE, down 40%, says it's in the ETF sector. This is a new listing on the ASX just today. And this is something I've realized when it comes to market index. A new listing will have a ETF sector. Share price could be down 40%. Typically, the beginning share price of a company, not always, but a lot of the companies that do list on the ASX have a start price, an IPO price of 20 cents. So technically, there is possibility the share price is down 40% if it started at 20 cents. I have no idea. I'm assuming Axel REE is rare earths based off the REE. No idea. I like the ticker code Axel. I like it. Axel Rose. What else do we have here? Nothing much. Oh, Readcloud, down 15.6%. This did make it into my top 5 stocks of the day on the back of their Appendix 4C. And I'm not surprised about their results. This is a cyclical company. And it seems like some people or some investors don't realize it's a cyclical company based off their Appendix 4C. We'll have a look at that company in a little bit more detail later in the video. And EZZ Life Sciences, down 12.2% on the back of their Appendix 4C, which is really good. I think it was really good. So I'm not sure why the market is reacting like that. The share price didn't start down lower. In fact, it opened at $2.25. So a lot of selling was during the day. So this could be a little bit of panic selling, that sort of thing. People saw the share price dropping. Maybe someone dumped on market. Someone else saw the share price dropping. Maybe some stop losses as well. And for some reason, people have just, oh my God, the share price is falling. They must have released a really bad Appendix 4C. So have a look at EZZ Life Sciences Appendix 4C. And that company did come in number 3 on my top 5 stocks of the day. I'm a shareholder of that company, but I'll be more likely buying more shares than selling shares in that company. I think it's cheap. At a market cap of 89 million, and I'll tell you why it's cheap, potentially cheap. Even though when I did tweet it, I said it's not really cheap anymore, but it's definitely not expensive either. I don't think I said definitely. I just said it's not expensive. Okay, let's have a look by market cap. Land resources, lithium, okay. AIC mines, quite a few mining companies here, and small mining companies. So no big drops for big companies. So only 5 companies with a market cap over $100 million are on this list. And most of those companies, actually all those companies, are mining companies. Okay, so let's just have a quick gaze at the companies that release announcements after 11 a.m. What I want to do is, no, I'll have a quick look, very quick look, because quite a few companies have released RFU rare earths, Appendix 5B, but they're not in production. Calix, no, they did release the announcement later. Otherwise, Polynovo, financial year 24 trading result. How has the market reacted there? Up. So this is I'm going to put Polynovo at number 5, and that forces out SRG Global. I'm sorry, but I'll talk about SRG Global in the chart portion of the video, just because it's a trading result and I like trading results. Although SRG did release sort of like a result, but the share price has not responded as well as Polynovo. Race Oncology, Appendix 4C, but the company is not, does not produce any cash receipts. Victor Group released a half-year report. I don't think that company is profitable. Market cap is 17 million, so I'm going to forego that. Fosco released their cash flow report. So did Galawa. Got to have a closer look at Galawa. It's a small mining producing company, $14.9 million. Let's open this up and just see how much cash flow they did produce. So receipts of 954,000, and they were actually operating cash flow positive by a greater amount than the receipts, which is an impossibility, except they received $371,000 in other. What the heck is other? I'm just going to ignore this because I have no idea what other is, unless they sort of stated it somewhere else, but a very small mining producing company. What else do we have here? Visioning Technologies, their Appendix 4C. Now, this company has not been operating cash flow positive every quarter. So typically, this is exactly what I do for every single Appendix 4C or 5A. Open up, look at this page, and if I don't see it operating cash flow positive, I move on to the next one. And this was operating cash flow negative by 872,000. So move on to the next one. And then we have M8 Sustainable. And I'll do the same thing over and over again. And that's why I don't really like the last day of July, because you get a lot of these $153,000 receipts. Move on to the next one. And then we have Calix, that announcement about the emissions plant, Mesoblast, and then we have Demerix, which I do own. I am trading. And I would say, I can't remember if this company would have receipts this quarter. No, because they do get lump payments. So operating cash flow negative. So you've got to have to look past this particular quarter for Demerix, and share price is down. That's just a bit of an overreaction from the market, because some participants in the market don't really understand this business. So they just see, no cash receipts, oh my God, I'm going to have to sell. Oh, I'm going to have to sell. That is reaction from some investors. Okay, so let's go to the top 5 stocks of the day. We'll start off with number 5, which was SRG. Now it's Polynovo. Actually, no, let's do SRG as well. Let's do both of them. SRG, share price up 3.93%. I do like the chart of this company, I'll be honest with you. And that's one of the reasons why I was okay moving it to my chart section or portion of the video. So market update and a financial year 25 outlook. I actually did like this announcement, so I'm not surprised to see the share price up a little bit. And this is a potential trade. Potential, I wouldn't say, yeah, I could say this is almost a breakout. And this was a really nice announcement from the company. EBITDA for financial year 24, I sometimes wish instead of EBITDA, they just go profit or cash flow. But EBITDA is an okay proxy for cash flow, in my opinion. Upper end of guidance at 98 to 99 million. Net cash of 17.8 million from net debt of 17 million. That's fairly important. Continued strong margins. I like that. A record work in hand of 2 billion, and financial year 25 EBITDA expected to be circa 10% higher than financial year 24. So a nice announcement from SRG. No complaints from me. I don't think any shareholders would be complaining. And then you have a look at the chart, and this is a nice looking chart for the company. Share price has been as high as 95 cents today, and now is at 92.5 cents. A beautiful chart. Share price breaking out back in February at 68 cents, and share price is now almost double that. Yes, it's not double. It's up 50% from there. So nice looking chart for SRG. Just going to have a quick look at the weekly chart. And the share price is at a longer term high. Yo. So it's getting up to the highs we saw back in 2017. So we're at a 7-year high for SRG. Beautiful looking chart for this company. So this company is on my potential buy list. I'll tell you that right now. The other company that was fighting with SNG to get into number 5, just based off their late arriving announcement, their trading update, and that's Polynovo, share price up 7.9%. Unaudited financial year 24 trading result. I would have expected really good numbers here for Polynovo. So, and really good growth. That's what I mean by good numbers. Good growth. So revenue of 104.8 million, up 57.5. Financial year 24 sales, 92 million. Why is it different? Total revenue, including barter, on, I wonder what STL means. Same time last year. They use different, some companies use different wordings. I see last or previous corresponding period, STLIY is the first time I've seen that, but I'm assuming it's same time last year, same period last year, but I don't know. Anyway, what's the difference between total revenue and financial year 24 sales? Is that difference between receipts and revenue? Strong growth in US sales, 68.7 million, up 49%. Rest of world sales, 23.3 million. Notice I don't mention profitability, profit or cash flow, that sort of thing. It's all about revenue growth for this company. Now, Polynovo does have a market cap of about, I'm assuming about 1.4 billion. I could be a little bit off there. 1.8 billion. So you do have to pay for this company right now. There's a lot of, I wouldn't say froth, but there is a lot of success already built into this company's valuation. And let's just have a look at the chart. Another reason why I'm paying close attention to this company is just based off the chart. Share price in a nice uptrend. Interesting trading today. So it seems like there's been a little bit of volatility today, and more than likely after the company released their report. So what time did the company release their report? It was about midday, was it? 11:43 a.m. So let's have a look at the 1-minute chart. Oh, yeah. A lot of volatility when they released this announcement. In fact, the share price initially dove all the way down to $2.26, then went from $2.26 up to $2.56, dove back down to $2.36, rose back up to $2.56, dove. You notice all the lows are higher. So the lows are increasing, which means there's less selling as the day moves on. And now the share price is at almost a high of the day. So you'd be kicking yourself if you sold just after midday at $2.26, because the share price is up over 10% since then. This is a problem when you read one of these announcements and then you react on your reading of this announcement almost straight away. I try to be a little more patient, just see how the market reacts, not in the next first 20 minutes of trading, because you can just see here with Polynovo, if you did that, overreacted based off the share price diving in the first 10 minutes, you might have sold shares at 2.26 and you're regretting your decision right now. So interesting trading in Polynovo. Share price is getting up to 260, which means the last time share price was at high for Polynovo was way back in the high period back in January 2023. So there is a resistance level at 260. Just draw a line at those highs in January 2023. So it's at a resistance level right now. But otherwise, chart looks pretty good for Polynovo. Did they go on? No, that's it. We'll disclose audited results on the 23rd of August. But just a reminder, this is just revenue growth. This is revenue. There's no profit or cash flow just yet, but they're growing quite nicely. You have to be, if you're a shareholder, you probably have to be happy with their growth. So that's Polynovo. and SRG Global coming in at number 5, joint number 5, equal number 5. Now let's have a look at a company called Readcloud. Share price down 13.91% on the back of their Appendix 4C. If you open up their Appendix 4C, there was no surprises. In my opinion, no surprises here. Company was or had receipts of about 3.4 million, operating cash flow negative. Not a surprise, in my opinion. And I'll tell you why it's not a surprise. Now, one of the reasons why the share price of this company has been on a massive run is because their March quarter results came in, and we're going to have a look at the March quarter results. And they released their March quarter results on the 18th of April. And these did jump out at me. But even though they jumped out at me, receipts 5.2 million, operating cash flow positive 1.9 million. So this would have been great if this company is not cyclical. This company is highly cyclical because they sell stuff to schools. And you think selling stuff to schools and parents, that sort of thing, you'd have more receipts in the first quarter of the year when kids are going back to school. That sort of thing. That's exactly what happens. What does this company do? They sell stuff to provider of e-learning software solutions and industry-based training. Yeah. Supporting over 600 schools and educational institutions. So again, yeah, start of the school year, that's when they're going to make most of their money, revenue, cash receipts. And to back that up, let's have a look at the company's receipts history. Here it is. Here it is. The last thing I looked at before I went away in the morning. And the first thing you'll note, there's always a peak in receipts in the March quarter. This goes all the way back to 2019. Only once did we see the June quarter receipts a little bit higher than the March quarter, but ever since then, you see a dual peak in receipts in the March and June quarter. Back in 2019, 2020, 2021, 2022, 2023, and 2024. The good thing is receipts are growing. So if you look at those two peak quarters, receipts in each successive year is greater than the previous year. And then in the next two quarters, so we're talking about September and December, receipts tend to drop a fair bit. And receipts, I suppose, in this quarter were a little bit more than the previous corresponding period. The most important thing here is the market really reacted positively to those March quarter results. And again, I don't want to say it, but I do think there's naive people in the market who saw that quarter went, oh my God, this company is producing so much cash in their operations, going to have to buy it. And you can see the share price taking off. It really took off on the 18th of April, the day they released their quarter report. Share price on that day rose 31%. I'm pretty sure I did a video and kept on rising. So we have seen the share price pull back today because obviously some investors went, oh my God, they did so well last quarter, now not so good this quarter, I'm going to have to sell my shares. But the chart still looks pretty good for Readcloud. Really nice increase in volume. And I think the company is on that precipice of becoming profitable and cash flow positive and free cash flow positive for a year on a yearly basis. So I think they're on that precipice. And I am definitely following this company a little bit more closely. May not be the biggest fan of what they do, but definitely following Readcloud a little bit more closely. So that's Readcloud coming in number 3. EZZ, Life Sciences, coming in at number, 3. Share price has recovered a little bit today, thankfully. So share price went down as much as 188, open at 225, so not much down from the previous day. So obviously the selling happened during the day, not on the back of their Appendix 4C. So let's have a look at what might have caused this little bit of a panic. I'd say there's a little bit of panic today, maybe some stop losses. So the first thing I always do is have a look at their numbers. And there's nothing to complain about here. The receipts customers 22 or 23 million. For the year to date, 67 million. Now, one maybe small complaint is receipts for this quarter were a little bit down from last quarter, but that's seasonality and cyclical nature of this particular company. A lot of their business is in China, and most of their sales would be in that first quarter of the calendar year. So you've got to take that into account as well. Most important thing, operating cash flow positive, $4.5 million for this quarter, $6.2 million for the year. And the other thing to really pay attention to when it comes to this company is their really high gross margins. And because they have really high gross margins, they do spend a lot of money in advertising and marketing. So if you just look at the year to date, $67 million in receipts, and they spent $37.8 million in advertising and marketing, but was still operating cash flow and free cash flow positive. That's the benefit of having high gross margins. You can spend that money to grow the company in other ways, like advertising and marketing. The company is growing. And we know it's growing because, again, let's have a look at their cash receipts history. EZZ. And by the way, I am a shareholder of this company. And for some reason, it doesn't want to search EZZ Life Sciences. Search. I'm not sure what's happening there. Sometimes this can be annoying. Find in document, it just doesn't want to work. EZZ. So do I have to find this myself? I have no idea what it'll be. I have a lot of companies here. I'm not sure why it is not working. It's not even... No. Oh, dear me. There we go. Not sure what happened there. Anyway, here we go. This is receipts history for EZZ Life Sciences. So receipts were down a little bit from last quarter, but again, it's seasonal. I can see receipts significantly growing from the December quarter, up from 13.6 million to 23.6 million. And I can almost guarantee you, someone saw the slight decrease in receipts and went, oh, I'm going to sell this company. Oh, I'm going to sell. Receipts are down from last quarter. Look at the trend. That's the most important thing here. Look at the trend. The trend is significantly up. There was one slight negative I did find in their commentary, one slight negative, but I can't find it now. They were disappointed with one of their channels, selling channels. Here it is. Oh, yeah. But over the last 10 months, sales to HIC, EZZ's fourth largest distribution partner, have fallen short of expectations, with sales totaling approximately 4.3 million. So probably one of the only negative things I could find in this particular report. But obviously, some people are panicking and selling because the share price is down 11%. And I wouldn't be surprised to see the share price rally the next week or so back up to where the share price was yesterday. So that's about $2.29. Okay, so it's EZZ Life Sciences. And I'll have a look at the chart first. Another reason why the share price could be selling off, apart from people panicking, is just profit taking. So you get the dual profit taking and panicking combined, you'll see the share price drop. But we saw this back in June, 24th of June. Share price on that day dropped 12.2%. Share price the next day rallied higher. Yeah, it went above the share price from when it closed or opened the previous day. So just don't panic on days like this. High volume coming in, but that's okay. That's okay. Share price is still in a beautiful uptrend. I do get nervous when I see charts like this, when the share price is just going up. So it seems like extremely, but, and I think I did mention this, so I was going to move on, but I do think this company is cheap. So let's just go back to these numbers here. So the market cap of this company is maybe 90 million. Second most important thing with EZZ is they have almost $20 million of cash on hand, $19 million of cash on hand, no debt, which means enterprise value is 61. So enterprise value is 61, have operating cash flow of 6 million. So this company is trading on 10 times operating cash flow. For a company that is growing and is profitable, I would take that. That's I wouldn't say it's cheap, but for this type of company with really nice gross margins, yeah, I don't think this company is cheap. I wouldn't say it's expensive either. My one concern about this company is, I wouldn't say an over-reliance on China, but they do or are dependent on China a little bit greater or more than what I would like. If you go through their comments or their commentary, they do mention China a fair bit. but they are trying to expand into the United States. So there is potential, particularly because their products might be attracted to those health conscious people, maybe the overly health conscious people. I do think there is potential for this company to grow a greater amount outside of China, and if they do that, be very happy. Okay, so that's EZZ Life Sciences coming in at number 3. Coming in number 2, we have Quickstep Holdings, up 24.14% on the back of a fairly positive update, business update. And there's been a lot of positive momentum behind this company just by looking at the chart in the past, I'd say, month or so. And this sounded pretty positive. I've been following this company for 10 years, and this is the most positive I've been on this company. And I think it's been the most positive we've seen the management being in regards to this company. So this is an aerospace composite business or something like that. What do they call themselves? An aerospace composite business. Actually, just exactly what I said. So they do a fair bit of manufacturing. So there is a bit of capital intensiveness to this company. So they do have a relationship with Lockheed Martin, C-130 program. They also do drones. They produce drones, and they're expecting revenue of 99 million, which exceeded the guidance. So this was, in a way, a revenue upgrade from the company. So they expected guidance or revenue to be between 94 and 96 million. Now they expect it to be 99 million. Underlying EBITDA positive for financial year 24. Now this company has always had pretty high revenues, but it's just the margins, really low margins. It seems like they needed to get into relationships with like Lockheed Martin, and to get into these relationships, they needed to produce these products at low margins. So that's probably my one complaint about this company is their low margin. So maybe things are turning around for Quickstep, and you probably can see that just in the chart. Talking about drone production, which is one reason why, yeah, I don't know. I am very interested in their results. Very interested to see what the margins are compared to previous years. I'm just going to have a quick look at FinChat, and we'll have a look at Quickstep, their margins. Quickstep. Now I'm assuming they've got really low margins because they've always had okay revenue. For instance, revenue, nice increase in revenue, by the way. So revenues have increased during the past 10 years from 12 million to 101.1 million for the last 12 months. So let's just have a look at their margins and yeah, really low gross margins here. So in fact, the last year was only 10%. In fact, gross margins have been dropping, and that's another little bit of a red flag for me. And that sort of makes sense. Revenue increasing, gross margins decreasing, which means share price has been dropping significantly over the past 10 years. So let's have a look at the chart for Quickstep. So I have been following this company for 10 years because I do like these sort of companies if they have or implement a successful business model. And I'd say Quickstep have been unsuccessful when you look at the chart over the past 10 years. In fact, the share price has fallen significantly. Not only the last 10 years, share price has fallen significantly in the last 17 years. In fact, it's been a long-term downtrend. A little bit of promise back in 2019, but that promise faded fairly quickly. And if you just have a look at the weekly chart, share price has been on a massive tear. In fact, share price has doubled in the last month and a half. So let's have a look at the daily chart. And I think this is looking like a breakout. This is looking like a breakout. Really big volume coming in today. And I think the excitement in this company today is on the back of the increase in share price from middle of June. Share price in the middle of June was 15 cents. Now it's 36 cents. Wouldn't be surprised, a little bit of profit taking. Wouldn't be surprised to see those shareholders who bought at high prices in the past now seeing the opportunity to sell out of Quickstep at a lower loss. But bigger volume, I'm always attracted to that, always. And really big volume coming through for this company. Okay, so that's coming in number 2, we have Quickstep. Coming in number 1, we have Delorean, my Back to the Future company, up 72% today. A market update. At the beginning of today, the market cap of this company was 10 million. So just remember that. This company had a market cap of $10 million. This is a bioenergy company. Something to do with that. In fact, they call themselves the leading Australian bioenergy company, specializing in design, build, ownership, and management of bioenergy infrastructure. In addition to bioenergy power and renewable gas generation, they also operate in the energy retail market, a vertically integrated company positioned in two high-growth industries: renewable energy and waste management. I have been following this company for a little bit of time, but there's one thing that's kept me away, and that's the chart. So possibly this is the inflection point for this company. Now, this did really pique my interest when I saw this morning. So this company is profitable. EBITDA of between 4.5, and remember, this company had a market cap of 10 million. Now, they do have a little bit of debt. I'm going to have a look at their most recent Appendix 4C. So this company does release a quarterly report. I haven't released it for this June quarter just yet. EBITDA between 4.5 and 5.1 million. So this company was trading on 2 times EBITDA at the start of today. So you can sort of see why the share price reacted the way it did, or the market reacted. Revenue between 27 and 28 million. Record NPAT for the year, but they do not mention what that number is. Cash at bank, 8.8 million. So keep that in mind as well. So let's go back in time, have a look at the most recent Appendix 4C, which they released on, in fact, the 30th of April, the last announcement the company released. There you go. And I actually went back the last 2 Appendix 4Cs, and this company has been historically operating cash flow and free cash flow positive. So this company, in the last quarter, $5.6 million of receipts and was operating cash flow positive, $790,000. For the first 9 months, operating cash flow positive, $2.9 million. Not a lot of capital expenditure, by the way. So all that falls to the bottom line. So $17.6 million receipts. So don't forget, but receipts can be a little bit different than revenue. It's all based off timing. So I'm not going to try to compare their revenue expectations of 27 to 28 million to that receipts, because that would suggest they're going to have receipts of about $10 million in the fourth quarter. Anyway, let's go back down to the cash on hand. Here it is, section 5. So cash on hand at the end of the quarter, 6.8 million. The reason that's important is if you have a look at this statement here, cash at bank, 8.8 million, which means they were free cash flow positive by about $2 million in the last quarter. That is important. The other important thing, and I would say some detractors of this company would point to their debt. This company has debt. They do have $8.4 billion of debt, but they also have cash on hand of 8.8 million. So this company has net cash, not net debt. So I don't mind when a company has net cash, even if they have a little bit of debt on their books, because they are net cash. So, and maybe their debt has increased a little bit. I don't know. I don't know why it would have. So anyway, this is a really positive report from Delorean. They're in the right space. The company is growing. They're profitable, increasing cash on hand. And I can definitely see why the market reacted. Now, I have not been that interested in this company because of their chart. So let's have a look at their chart. So up until today, nothing much happening. Looks like the share price was trying to break out back at the start of the year, but that breakout failed. And you can see very low volume. Well, it might have been low volume. It was sort of low volume. Share price started to fall before this particular announcement and then started to rally a few days leading up. And then the share price has exploded today up to, share price actually went above 10 cents for a brief time today. But the volume, massive volume coming in. So this is on the radar of investors, maybe some fund managers as well. And if they do release Appendix 4C, there is a chance they don't have to, because they have been operating cash flow, free cash flow positive for at least 2 quarters, only went back 2 quarters, which means they might have been relieved of their Appendix 4C or their quarterly reporting duties. That's possibly why they released this announcement today. But if they do release that quarterly report, I think it will be positive, and that could attract even more investors to Delorean. So this company is on my watch list for a potential buy right now. If you have a look at the weekly chart, by the way, share price has been a downtrend since they listed back in early 2021. So this could be the turnaround for Delorean Corporation, a profitable company on the ASX that is not that expensive. In fact, I would even say this company is quite cheap. At a market cap of $20 million, I would say the market cap might be lower than 20 million. Let's have a look. I'd say it might be 17 million. Yeah, 17 million. There you go, 17 million. I think this company could be looking pretty cheap. Okay. Okay, I'm taking a little bit too long. What should I look at? A few charts. So I was going to have a look at Spartan Resources. They did release a sort of an, what do you call it? What do you call it? I'm going to kick myself as soon as I say it. Mineral resource estimate update. Share price up 23.6%. Market cap of this company is like 1.4 billion. Chart looks pretty good, however. Now, the run-up in share price in the past few months has been a little bit extreme. It's more than doubled since May. So I think there's a little bit too much excitement in this company right now. But I like the chart. Chart looks really good for Spartan Resources. I'm going to have a look at the chart for CSL. I think this chart is starting to look even better. I'd love to see the share price get above this dashed line. That dashed line is a nice little resistance area. So if the share price gets above 320, that would be a nice little gift for all of us, for all the CSL shareholders. But if the share price gets above 340 and stays above 340, that would be confirmation that there is potential. Share price of CSL is moving into an uptrend. And that would force a lot of the people who are selling out, because there are people who are trading this company. They buy when it gets down to below 270. They sell when it gets to 300. So a lot of those who are what did I say? Range trading this company have already sold out when its share price got to 300, and they could be kicking themselves soon if the share price keeps on going higher from here. That's a big if, though. Big if. A few other companies I want to just have a quick look. Nuix, share price increased a lot today, and its share price fell into the short-term moving average channel yesterday, and it's bounced off it today. Perfect technical analysis, or perfect trading there. The other one was Superloop. This was probably another bounce off the short-term moving average channel. Oh, it fell a little bit more deeply into that, but nice little bounce there. And we also have Southern Cross Electrical Engineering. I wouldn't say this is one of my favorite companies on the ASX, but this is another bounce off, moving into the short-term trading channel, which is this area. Hey, so it bounced there in June, and it's just bounced off that level again. Calix, I think I've already looked at Calix. What else? Woodside. Share price plunged today, and chart. Oh, and those traders who were saying this is their biggest position last week now. I wonder if they're selling now, because the chart looks pretty bad. I don't know why. I don't understand why people were buying that. And Insignia, that was the other one. Insignia, possible breakout. This could be an acquisition I make in the next few days. Up 7% today after a good report yesterday, and a much better looking chart for Insignia Financial. Okay, that's all I'm going to have for today's video. A few other companies you might want to have a look at. So I haven't mentioned some of the Appendix 4Cs and 5Bs that were released today, and mining companies' reports or quarterly reports. We have Ora Banda. Ora Banda released their report today. In fact, I can go through the charts really quickly because I have a little bit of time on my hands. So Ora Banda share price did dip, down 4%. Qoria released their Appendix 4C, company close to getting to my top 5, but they were not operating cash flow positive, so they missed it. Aluka released their quarterly report. Trend looks terrible for Aluka. Woodside released their quarterly report. That's probably why I wanted to mention Woodside in my charting part of the video. Lynas Rare Earths released their quarterly report. Share price down a little bit, not much. A company called Metals Acquisition. A company that recently listed on the ASX. When I say recently, I'm talking about in February 2024. They released their quarterly report. Share price all up and down a fair bit. I had a very quick look at their quarterly report. This company is into copper. This is another copper producer on the ASX. And I'm pretty sure this company has a pretty high market cap, 1.41 billion. So everyone's talking about Sandfire is the only big one. Well, here we are. Metals Acquisition is another copper producer. And when I say another copper producer, I can't remember any other commodity they produce or mine. Let's have a quick look. So in the highlight section, they're just talking about copper, material free cash flow, copper. Maybe they do own other stuff, but focused on operating and acquiring metals and mining businesses in high quality, stable jurisdictions. So it's just not copper, but they just talk about copper because it might have had a really good, copper. It's mostly copper here, according to that little chart. And Grange Resources, which is a high iron ore producer, something like that. And share price of Grange Resources looks ugly and has been looking ugly for a long time. And this is when you want to be in Fenix. Let's have a look at Fenix. Just for gills, this is the mining or the iron ore company to be in right now. Fenix chart looks absolutely stunning, particularly when the share price of iron ore has been dropping. Okay, that's all I have for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.